Welcome to everyone at home to our end of year review and the year that was. I'm Sam Stillone here with Dr. Steve Garth. Steve, we're just coming up to Christmas now and bringing a close to the year. Just want to have a chat about the investment markets, how things have gone. The Australian share market, very turbulent times over the last 12 months. Just give us a quick rundown as to what's happened.
Look, Sam, it absolutely has been a volatile time. Markets started the year going down, then they went up, then down, then up, and I'm sure everyone knows that. What might surprise the audience though, Sam, is the market's actually up year to date. Now this has started to November the 30th, but the market's up by 2.2% year to date, which is kind of remarkable given what's been going on and what you've been hearing in the media. And you know, Sam, it's all got to do with the last quarter, or the last 8 weeks anyway. Yep. Since the 1st of October until November the 30th, the market's up an extraordinary 13% here in Australia.
Australian share market done reasonably well in difficult times. International shares have been a little bit more tougher environment.
You can see in this chart here, Sam, that markets besides Australia are negative. Mind you, Sam, they are still all up by around 10% in the last 8 weeks. But you can see the European market, which of course is really having a tough time, but they're down by 6.7%. The US overall market down by some 13%, but that was down by 24% at the end of September. And the NASDAQ, that's where the high tech stocks live, well, that's down by 24%. But it was down by as much as 32% at the end of September. So you can see that all these markets have lifted in the last few weeks. But yes, it's still been a tough year there out in international markets.
Yeah, and we're hearing people calling this maybe a Santa rally. What is that, Steve? Maybe you can explain that.
Yeah, so a Santa rally, it's not unusual to find out in the weeks leading up to Christmas, the markets just tend to go up for no particular reason. The best reason I've heard, Sam, is that all the brokers are out at Christmas lunch and really aren't looking at the market and don't care anymore. The trouble with the Santa rally is that it implies that it won't last. We don't know whether this is a Santa rally and it's all going to end kind of soon. But Sam, it could be a real rally. When you think about the current economic situation, we know there's a few more rate rises to come, but not that many. We know the terminal rate is not that far away, and markets are expecting, for instance, the US to be in recession at the end of next year. Not so sure about Australia. Either way, all this information is known, and if the markets have priced that in, this Santa rally could well be a real rally. But of course, there's lots of economic events that take time to work themselves out.
What about the bond market over the last 12 months? Typically bonds tend to be more defensive and they provide investors with a bit more protection from the volatile times from the share market and the property market, but we haven't seen that protection over the last 12 months.
No, that's right, Sam. You're absolutely right. Typically, bonds are less volatile and they actually behave differently to equities, so they're a great defensive asset. But they don't do that all the time, and it's rare, but this is one of those times when bonds have gone down, when equities have gone down as well. In fact, Sam, it's been the worst return for bonds, I think, pretty much on record. Certainly in our generation, we've never seen bonds this bad. But there's a ray of hope here too, Sam. Just as we've seen a Santa rally happening in equities, if you look at this chart of yields, now when yields go up, bond prices go down. And you can see we've been looking at those 10-year yields going up and up, both in Australia and the US over the last year. But if you look at the last few weeks, once again, you see those yields starting to come down. Yields go down, bond prices go up. And in fact, bonds in the last 8 weeks have got a positive return of just over 2%. There's a bit of work to be done, but you can see the bonds are on the right track. And of course, Sam, from an income perspective, you know, a diversified bond portfolio is earning 5-6% per annum now just on income. So, you know, there is some ray of light there with the bonds.
Yeah, fantastic. Thanks very much, Steve. For all the people there at home, thank you very much for your support over the last year. We wish you and your family all the very best for Christmas. We hope that you share the spirit of Christmas with those who are around you, and that next year brings us all good health, happiness and prosperity. From all of us here at Insight Private Wealth, Merry Christmas.